Hey guys, happy Labor Day Monday. Thanks for joining me today for another market update. I'm Caitlin McKegg. I am a Phoenix real estate broker, and every Monday you'll find me here giving an update even on Labor Day. I'm clearly a little bit more casual today, hanging out in my t-shirt, my positive vibes only. And I am here to talk through what's been going on in the Phoenix real estate market and what's to come. I don't know if we are starting to see a little bit more balance or not. I've been talking about that lately, but we are seeing a little bit of improvement for sellers, and I'm going to get into that a little bit more today. So let's start, as we always do, by talking about what's been going on in the overall economy. Mainly, let's talk about the big news from last week, which is the jobs report. So jobs report came out last week. Payrolls rose 315,000 in August as companies keep hiring. Non-farm payrolls rose by 315,000 jobs in August, just below the estimate of 318. The unemployment rate climbed to 3.7%. Keyword there, climbed. That is new news. Wages also rose. The average hourly earnings up 5.2% from a year ago. And the biggest sector gainers were professional and business services, healthcare, and retail. So what does all of this mean? We have been hoping to see some softening in the labor market because it has been going so strong, which is another reason why the Fed continues to hike the federal funds rate to slow down inflation, slow down the economy. But every time they're doing that, we're still seeing a very strong jobs report. So this is the first time we're starting to see a little bit of weakening in the labor market. Not much, but we'll see if it continues to trend. The unemployment rate ticked up just ever so slightly, but basically, Jerome Powell said, until we start to see some changes, we are not going to stop with these interest rate hikes. So they meet at the end of September. At their next meeting, the word on the street is the interest rate increase will probably be about 50 to 75 basis points, depending on what other news comes in between then and now. And they are trying to get the federal funds rate to 4% by next year. We're around 2.5% now. So we have a ways to go if they want to continue to do that. So jobs report came out. Long story short, good news, bad news, nothing too big in that, but maybe we're trending in the right direction. So that brings me to mortgage rates. As you all know, I am not a mortgage lender. I am a real estate broker, but this information is helpful. Now, keep in mind, rates depend on a lot of different factors. So I can't really quote you a rate, but I know for the most part, they're in the low sixes for 30-year fixed conventional. But this is about mortgage rates climbing close to the threshold where the average family can't afford a typical home. And this isn't a surprise. We're seeing affordability issues in a lot of different markets, including Phoenix. Mortgage rates moved higher this week, signs that the Federal Reserve will continue to hike its trend-setting interest rates. Talking about, here we are with a 30-year fixed. This is saying 5.6 up from 5.5. The sources that I have in the mortgage industry were saying low sixes this week. So, again, it depends on different factors, but the challenge is if these prices don't come down and mortgage rates keep going up, we will continue to have an affordability problem. And I know that's counterintuitive to the news I'm going to share today, but rates really are a huge determining factor. And so the way that it stands right now, we're in a bit of a balanced market for the most part throughout Phoenix, but that could change very quickly if rates go up, especially if rates go up quickly. So we're teetering on an affordability issue and really have been for a while. So let's start talking about Phoenix specifically. Now, if you're new here, I follow the Cromford report, which is a subscription for realtors. They look at all of the data in the MLS and really break it down to some awesome charts and graphs for us to use to understand what's going on in the market. And one of the awesome things that they have is this thing called the Cromford Market Index. The way to read it is that anywhere between a reading of 90 to 110 is a balanced market, Any reading above 110 is a seller's market, and any reading below 90 is a buyer's market. So I'm going to jump over there and let's see where we stand this week. We are at 105.5, and I'm going to try to make this a little bit bigger for you guys if I can. Sometimes this is finicky, but we'll try here. So let's break these down. So 105.5, that is the overall Phoenix metro market. And again, as I stated, 90 to 110 is balanced. So 105.5, we are in a balanced market throughout the Phoenix area. And this has not moved that much. I can't remember exactly where we were at last week, but I want to say it was like 107 or something. We were seeing massive changes in this number over the last few months, and it really is not that changed this week. So that is another, encouraging factor that this fall from the top is starting to slow down, and maybe we're just going to hang out in a balanced market. Now, for each of these, we do have a demand index and a supply index. So looking at demand first, 79.7. So that means we're about 20% below normal for demand if 100 is normal. And so demand's been going down. We used to be 20% above normal. So we've totally done a 180 on demand, but this has also been kind of hanging out here in the high 70s for quite a while. So demand has stopped falling, and we're even starting to see a little bit of an uptick in demand as well. So that's something to keep an eye on because demand is a big factor right now. Our supply is still really low. We're still 25% below normal for supply, but this has creeped up in a big way over the last few months because we used to be 75% below normal. But still below normal in supply. So we have this low supply. We have a lot of people in this market who bought a house in the last couple of years and have gained some good equity and have either refinanced or started with a really great rate and don't really have a reason to sell. So supply will likely stay low unless there is some outside factor that changes that. And, again, everyone has their opinions on market crashes and everything that could happen. I'm aware that outside factors could affect it, but for the most part, when you think about the Phoenix market, a lot of people have a really low rate and some really good equity. And so this supply index, I would expect to stay there and to probably start to fall because we're already seeing new supply coming to the market slow down, especially compared to where we were at a couple months ago. So right now we've got supply that is almost equal to demand, which is why we are in a balanced market. Now, keep in mind, this is Phoenix Metro as a whole. When we look at more specific cities, you'll see that some are in a different situation than others. So let's get into that. Now, the first thing I want to point out to you guys, if you haven't been watching my channel for too long, you may not know this, but for those of you who have been around a while, look at this. Look at that. It's a green arrow. We have not seen a green arrow in, I don't know, since May, since June, maybe. A green arrow. This means that there was improvement for Paradise Valley in terms of its movement towards a seller's market. So it actually had a 2% change positive. All of these are negative. You can see those negative numbers. But Paradise Valley increased, and this is month over month. So this past week compared to the same week last month, there was a positive increase. So we're starting to see that. I don't know if that's going to follow through on other cities. If it does, it will likely be Fountain Hills, Scottsdale, and Cave Creek that also see that trend because they are the strongest cities that we have. They are the only cities that we still have in a seller's market throughout the Phoenix area. And so that trend could continue for those as well. But Paradise Valley, first city to start to see some improvement towards the seller's market and stay strong. With that too, there is some other information that I wanted to share, just like specifically about how we have been trending. And I'm going to read some of this directly from the Cromford report. So The average monthly change in the CMI was 15%, negative 15%. So we went, down. Obviously, that's where we've been trending. This is another improvement on the week before, when the reading was negative 20% month over month. So although we're still seeing this deterioration for sellers over the last month, most of that happened in the first 2 weeks of the month. So the first half of August. The deterioration has slowed down during the second half of August. And now we have the first city showing improvements, so Paradise Valley for sellers over the last month. They also say that Carefree also looks healthier, but it's too small of an area, so they can't generate a CMI number to show that. There's only 4 cities that remain over 100, like I just went through: Paradise Valley, Fountain Hills, Scottsdale, and Cave Creek. They're the relatively expensive parts of our valley and all in the Northeast. If we focus on the CMI changes just over the past week, there's a few other cities that edged higher. Now, keep in mind, Paradise Valley has a green arrow because we're looking month over month at the change. But if we look week over week, we actually have Scottsdale, Chandler, and Tempe. All of them actually saw a positive change week over week. Scottsdale was a change, went up 1% week over week. Chandler saw a change of 2% week over week. And Tempe saw a change of 0.1% week over week. So we're tracking it. No matter if it is a small change, it's still a difference in the direction we've been heading. So whether or not that continues is a good question, and we'll have to see. Maybe next week we'll have more than one green arrow on here. I would be surprised to see that. What we do know is that the mid-range of homes between 300,000 to 1.5 million, that big sweep that is the majority of our market here, are still seeing the most difficult conditions for sellers. And this is because they aren't acting like the Paradise Valley, Fountain Hills, Scottsdale, Cave Creek, those more expensive areas of the market that still have pretty strong demand and low supply, or under 300,000, which is hard to come by anyway. So if you do, there's a lot of investors that are still willing to buy in that price range. And then in particular, the hardest hit areas are some of these more outlying areas like Buckeye, Queen Creek, Santan Valley, places that have a lot of new construction and are a little bit further out of the major city centers. So that is where we are at with the different cities. And that is, my little news about what's been going on with sellers and some possible improvement. So we're going to have to keep an eye on it and see if this continues, if this is a trend. But as I've been saying lately, I really feel unless we have some pretty significant changes with rates, which could happen based on what I was saying earlier, I think we're hanging out in a balanced market for a little bit, and we might start to see some improvement for sellers. So what does that mean for you? If you are selling your home, you need to keep tabs on what's going on in the market, because things could be, depending on your price point and your area, things could be very challenging for you right now, or they could be starting to get a little bit easier. You also might just start to see a few more buyers coming to the market, and less competition coming to the market quite as quickly. So there are some positive outlooks for you as a seller. As a buyer, it's good to track this as well, because I'll tell you what, last week I reached out to 2 different agents about homes that my buyers were interested in, and both of them had multiple offers, if you can believe that. And I was like, what is this? What just happened? Are we going back in time? Please don't take me there. So as a buyer, keep tabs on all of this, because I think a lot of buyers are finally going back out to the market, coming to terms with the interest rates. And if they need to buy a house, they're interested in making that jump right now. And so your competition as a buyer is still very, very low, but we may start to see an increase or an uptick in that. And if we don't see a lot of new supply hitting the market, I don't think we'll go back to the insanity we were in before, but we could be back in a strong seller's market if all of those things continue. So anyway, those are just my thoughts based on the data, based on what I'm seeing in the market. And hopefully that's helpful to you. So check the description below. I have a link for an instant home valuation, a relocation guide, and searching my MLS for homes for sale. So all the great stuff is there. And if you want to chat with me, you can also reach out to me directly or click the link to set up a time to chat. Thanks for joining me on Labor Day. I hope you guys all took some time off today, enjoyed the day, sat by the pool, hung out with family, barbecue, whatever it is. And I am just excited that Labor Day means fall is around the corner and we'll get some break in this heat here in Phoenix. So have a great evening, everyone. And I will be back later this week with more information. I'm Caitlin McKegg with the Desert Dreamers team at HomeSmart.